Good morning, traders, and welcome to the Pirate Traders live stream. My name is Charles Goff. This is the Brigade, the Public Day. Okay, so what do we think the market could do today? Well, there are days where the market makes it hard, and there are days where the market makes it easy. Pre-market yesterday, as I was looking at the market trying to figure out, what it was going to do, it was really hard because when we opened in the middle of this balance area, after we had spent, multiple weeks being pinned, it was hard to know exactly where the market would go from the open. It was hard to lay out a scenario of all the possibilities of what the market could do. I could have literally at market open yesterday given you, 50 different things that the market could have done that day and how it could have done it. It was hard. This morning, it is easy. This morning, it is very, very simple, and we have the probabilities in our favor. Now, the market is going to open here in a second while I am talking. So the first order of business for the market is to fill the gap. The market's first thing to do is to try to come down to 67.69. So that may start happening while I'm talking here. If you want to take a trade for a gap fill, that is your prerogative. But let me just walk through my entire analysis to make this make sense. So that you can understand why, to me, this morning is really easy, okay? First and foremost, what we understand about, so there you go, market's open. First order business is to get to 67.69, where we will look for support, okay? So the first thing that I like to look at is what we call balance and excess, right? The market spends periods of time in a certain range where it balances. It's basically just trying to decide if it wants to go up or down. Then it breaks out of that range and it goes up or down, right? If it breaks out of a range, it often comes back to back test it. And then if that back test works, that's when you get the follow through. So just zooming out here real quick and looking at the daily from the past and the way this works, you have balance, you break out, you have momentum. You have balance in the form of a channel, you break out, you have momentum. Balance, momentum. Okay. This is just a really common thing that the market does. Balance, momentum all the time. We had ascending triangle in here that when we broke out, we got momentum. Okay. So what's been happening the last few weeks? Balance. We've been going sideways in this range. Okay. And that's really important to understand because that's what gives us our context for this morning. Okay. Let me just zoom way in here so you guys can clearly see what I'm talking about. So, this is our balance area right here. Okay. It looks like this right here. That's the range. Yesterday, we broke out of that range. So from here, there's not that many things that can happen. There's literally only three options for what the market can do today. Option number one, we get the momentum. We broke out of balance. Now we get the excess and we have a big move to the upside today. Option number two, we come back to back test that breakout. We do find support, and then we have momentum. Okay, so both of those scenarios are very bullish for the market to continue higher. Another scenario that could happen today is the market could come back to back test that breakout, that balance area high, and it can just chop and grind and chop and grind and chop and grind all day long. That is a very common thing that the market likes to do. It gets everyone excited. It gets everybody long at the high, and then it spends a whole day going sideways, just wearing everyone out. So that is also a possibility. And then the last possibility would be that we come back to back test that balance area high and we don't find support there, which would increase the odds in the days ahead, not intraday today, but in the days ahead, we're going to have a big pullback with price. So essentially, one of three things is going to happen. Momentum up, chop right on the balance area high all day, or momentum down. Like one of those three is going to happen today. So if we zoom in and we look at the market profile chart, it becomes really, really easy to figure out which of those three is happening, right? So first things first, the market going down to fill the gap is not bearish. Okay. So as long as we are above yesterday's high, as long as we are above 67.69, it's door number one. It's bullish. It's the market is going to keep going higher. We broke out. We have excess to the moon, as they would say. Okay. But if we get back to yesterday's high and we don't find support there, we don't bounce, that's where the scenario opens up to saying, are we going to go higher or are we going to go sideways, right? So if there's no support, at the previous day's high, we start looking for levels where there could potentially be support and watching to see if any of those find support. If we find support at any of those levels, get back above yesterday's high, that's it. That's the back test. That's the momentum to the upside. Okay. We can play that game all the way down to this area right here around 67.54. This is what I'm marking as the balance area high. This is the level that will need to be back tested. Okay. In order to have a strong back test of the balance area breakout. So if they were to come back down to here, it could mean we're chopping and grinding, or that we're going to find support here and continue higher. But what happens if we start to get below 67.54, particularly with new selling? We get down there and we get more selling and more selling and more selling. Well, that's the look above and fail, which becomes really, really bearish. So how am I thinking about the market and trading it today? Well, at the market open, I'm looking to get to yesterday's high. Maybe I'm in a short. Maybe I'm just watching. Once we get there, if I'm in a short, I'm taking profits. If not, I'm just, watching to see what happens. If we get support there, I'm bullish. I'm in a long trade. I'm targeting either the overnight high or I'm just trailing my stop and monitoring for continuation higher. If we pull back into yesterday's range, I'm neutral. I'm cautious. I'm waiting for more information. I'm watching for support. Is there going to be support at one of these potential support levels? If we get it, I'm bullish, I'm long, I'm targeting the overnight high. Okay. If we get back to the balance area high, again, I'm neutral and I'm watching for support around that area. If we don't get it, that's when I get bearish for continuation lower. If it is going to be a gap and chop day, so if the market comes down here, finds support, and then just kind of grinds all day, well, then I need to wait a few hours and trade that reversion to the mean once I've established that that's what's happening. So that's it, guys. If you're new to trading the auction process, that might have sounded like a lot. It might have sounded like, oh man, that's so many things that could happen. But trust me, in the random chaotic markets that we trade nowadays, that is a gift. Being able to break it down to 3 simple concepts that give you actionable entries based on which outcome takes place. That's about as good as you're going to get in today's market. So today, to me, is easy. Let me know what you think the market is going to do today before I give you my opinion of which of those 3 is going to take place. I want to know what you guys think. So jump into the chat. There's a poll there and let me know. Do you think we're going up, down, or sideways? So that's just a general for the day, right? What kind of day are we going to have? Are we going to have a day where we just kind of chop and grind around yesterday's highs? Just a sideways day like that? Are we going to have a day where the market pushes and starts to make new highs and we close higher than we opened? Or are we going to have a day where the market sells off and we close much lower than we opened? Let me know in the chat, which do you think is going to happen? Speak now or forever hold your peace. Which of these scenarios do you think is going to take place today? Drum roll. The answer is 55% of you think the market is going up. 27% of you think the market is going sideways, and 18% of you think the market is going to go down. That means I think the market's going to go down. No, I'm just kidding. No, I think the most likely thing to happen today is the chop and grind on the balance area high. So there's sort of one of 2 ways that will play out. We fill the gap, we don't find support, and then we just start grinding. The other one is we fill the gap, find support, go to the overnight high, get a look above and fail, then come back down, grind. One of those 2 scenarios is in my mind the most likely for today, but I am bullish. I do feel the momentum. I do think the market wants to keep going higher. But to be able to enter trades for it, I would need to see evidence of it. I would need to see support at a key level. I'd need to see the market cross back through that opening price to really feel confident we're going to get that support. Because even if we get above the overnight high, we could still have that sideways grindy day if it's a look above and fail. So I would describe myself as neutral to bullish at this moment. Ba-da-ba-ba-da, ba-da-ba-ba-da. Bonjour, El Paris. Good morning, Percy. Street salsa in the house. Pirate parrot to you. Yakuza, hi to you. Jay in the house, he says, good morning. Pirates, it's another great day. Another great high in the trading paradise. At the big casino, let's make some money. Mark in the house, good morning to you. Jads is here. X liquidated. Will is here. Lucas says he's back from Japan. He says, Charles, you want to go? Yes, Lucas, don't start making me jealous right at the start of the stream. I really want to go. Billy K in the house, good morning to you. Mark 8H says, how can you tell when you have new selling? Well, we may have a chance to figure it out right now. So, boom, that's a gap fill. The market was just able to get to yesterday's high. This is a really important thing because a lot of the people that were shorting this morning were just shorting for that. They were just shorting to get to yesterday's high. So as we start to push into yesterday's range, a lot of those shorts, which is old business, right? People that went short from the market open till now, a lot of them were short. They were, because we went down, right? You had to have more shorts than longs for the market to have gone down and filled the gap. So what we're looking for now is new selling inside yesterday's range. Because if these traders, this old business, if it was looking to just fill the gap, they're taking profits right now. Okay? So that means we're removing sellers from the market right now. So for price to keep going down from here, we need new sellers to get in, right? Because if you have more sellers, then all of a sudden those sellers all start to take profits, the market stops. It stops going down. And so to keep going down, you need new sellers, okay? So when you hear me say we're looking for new sellers here or there, that is essentially what I'm talking about. I'm looking to move to a new level and then see what happens at that new level. And that's what we're doing right now. Right now, we are watching to see, do we bring in new sellers in here or do we just bounce right back up and out? How do we see it? Well, first off, we're looking at taper in volume. If the volume tapers off, less and less volume as we go down, that's a sign of buyers stepping in, right? There's more buyers than sellers, more buyers than sellers, more buyers than sellers. That's why we get that taper, okay? Less and less sellers as we go down. So that's a sign that we are not bringing in new sellers, that instead we're bringing in buyers. The next one we're going to watch is the ticks. What direction are they going from here, from right now? So if the ticks right now pop back up above the zero line, let's say in the next 2 minutes or so, the ticks pop up above the zero line, that's a sign that we've got momentum and that we've run out of sellers. If the ticks stay below the zero line and start going down, that's a sign of new sellers. Okay? So we just watch that. We watch the taper in volume. We pay attention to the tempo. Is it speeding up? Is it slowing down? Is there a change in tempo? And we watch those ticks. Right now, the ticks are telling us more selling. So that increases the odds that this is not a straight up gap and go, that we're going to need to do a little bit of chopping inside here. Now, remember what I said. Everything is still bullish above 67.54. They can chop and grind and chop and grind and chop and grind and chop and grind as much as they want down here. It only gets bearish with new selling below there. Okay? So right now at this moment, this is just a back test of the breakout. You got your range. You break out, you come back, you back test. If you get support, that's where you get the big move. Okay? So intraday today, this is bearish because we didn't get a gap and go. But bigger picture, it's still bullish anywhere above 54. So what am I doing now? I'm looking for support. Where is that level where the volume tapers off? Where is that level where the ticks reverse? I'm going to mark some levels on the chart here, and we will watch what happens when we get there. First one is just below price right now. Basically where the low is. That's the first potential bounce point. The next one is going to be the base of the spike up, or the J single prints from yesterday. And the last one is going to be that balance area high, which would essentially read as like a look below and fail of the overnight low. So these are the levels that I'm watching to see, do we bring in buyers or do we bring in new sellers? And oh man, I just marked those levels and then I got to move my chart. Okay. So right now, what do we have at the low? Taper in volume, right? 200 contracts, 1,000 contracts, 1,700, 3,000. So as the sellers kept trying to push it lower, buyers stepped in, okay, and turned around and brought it back up. That is confirmed by the ticks. That's a little bit bullish to see. The next question, can we get back above yesterday's high? And then can we get new buying there? That's the confirmation that this is going to continue higher. Let's see what happens. And by the way, getting resistance right now at yesterday's high would increase the odds of a choppy day, sideways day. So if the bulls want to take the market higher, they want to do it now. They want to get above yesterday's high and they want to stay there. The more time and the more volume inside yesterday's range, below yesterday's high, the less bullish. Let's take a moment to look at spot gamma and see what is, oh boy, gotta log in, oh boy, going off screen. There we go. Okay. So looking at the spot gamma here. So this first screen that we're looking at is the overall gamma on the SPX. Right now, it is leaning more blue. I would describe this as very mild blue. I know it's actually purple, but we just call it blue. Don't ask me. But but that's considered blue. And this is just not an intense blue color. Like if you look up here where it's really purple, that's what we would call like strong gamma. The area we're in right now is much lighter. Okay, so there's not a lot of gamma here. So that just means no clear edge based on gamma. Let's switch to delta. So again, in terms of delta, we're kind of in a dark zone right now. You see this red above. And again, these are SPX levels, not the ES. Okay, so they're going to be a little bit off from the ES levels. But if you look at these levels up here around, 6750, 6760, 6770, we start to get red up there. Okay, that's negative delta. So that's basically resistance. So if this market tries to start to make a move from now, and it makes a 20, 30, 40 point move, the higher it moves, the more resistance there's going to be. Okay. And the same thing is true of the blue down here. That is support. Now, it is not always like this. Sometimes they're inversed. Sometimes it's all red or all blue. But today the market is saying resistance above, support below, which increases the odds of sort of a sideways choppy day. When we look at the various strike prices, we're always looking for like one particular strike price that just jumps out at us as being, clearly the biggest level. Obviously right now that is 66.85, which is, roughly 20 points lower than we currently are. That's the biggest magnet right now. But I would also say, it's pretty spread out. So there's a good chance that if we do have a sideways morning, this will kind of disappear throughout the day. But for now, the gamma levels are saying a more likely move to the downside. That does change throughout the day, though. So really, we got to focus on price action. What is price action telling us? New selling. We just turned that area at yesterday's high into resistance. What did I say would happen if we did that? It increases the odds of chop. So I now no longer trust this support at 62. I think we need another dip. We'll be looking for buyers at 57. Can the buyers reverse it at 57 and get above yesterday's high? Or not? Let's find out. Oh, those bots. They're trying to make you think it's a double bottom. They're telling you to get long. They're saying get long, get long. Good thing we don't do what the bots tell us. We try to outthink the bots. Jay in the house, good morning to you. Jay says, hit that like button early and often. Yeah, I mean, it's a little bit embarrassing, you guys. There's 85 of you here and only 19 of you could hit the like button. I think we can do better. I think if we can get like 50 of you to hit that like button, we can probably bring in over 100 people. So let's see if we can smash that like. Right about now, smash that like button. Check it out now. Smash that like button. It's just one little push. It's just one little push. John says, what is the volume of this move up? We can take a look. I think it's probably too early to really think about it in the context of daily volume. We literally just broke out of balance yesterday. So today, by the end of the day, it'll be a good time to take a look at volume, particularly if we get momentum up at some point. Then it'll be a time to start looking at daily volume, compared to the last few days. But right now, it's just too early to think about it in that context. All that matters right now is price. So we always take our analysis and we do it in a very specific order. price advertises, time regulates, volume measures. So volume isn't going to help us until we know what price is doing, right? And price isn't really going to help us until we've spent enough or as little time to clarify what price is doing. Okay. So before we can trust momentum, we need to see, does price come back to the balance area high or does it immediately start to go higher? Once it comes back to the balance area high, do we spend a lot of time there? Do we grind and grind and grind for a whole day? Or do we just tag it and reverse higher? Or do we just push right through it and immediately go lower? We have to see where price goes and how much time it spends there as our first indicator of what is likely to come next. Then once that thing starts to happen, volume is what tells us, whether it's working or not. So let's say we came back to the balance area high and we bounced and we did not spend a lot of time there. Well, that's bullish, right? That tells us the market is likely to go higher. If we then get above yesterday's high and we start to bring in volume, that's when the volume matters because it is confirming what price and time told us. Okay. So we start with price. Right now at this moment, price has not told us what it's doing. We're still inside of yesterday's range. We have not back tested the balance area high. We have not brought in new buyers above yesterday's high. So we're just still in that indecision mode. Once price starts to figure something out, then we look for time and volume, which by the way, is happening right now. Boy, this is one of those days where as soon as I start talking about something, the market gives me a chance to use it as a learning opportunity. So here we go. We found some support. We're back above yesterday's high. How much time do we spend up here? How much volume do we bring in? So far, very little. We poked up there for 2 seconds. We brought in almost no volume at all. And now we're back inside yesterday's range. So that's, neutral to bearish. If we can get back above there again and start to spend time, stay up there, well, then we would ask ourselves the question, are we bringing in volume? If we see the volume with the time, then we know it's time for the move to the upside. But so far, the market is saying no, more chop, more sideways, more grind. Because we spent very little time up there and we brought in very little volume. So the auction has not changed. What is the current auction? Balancing in the upper end of yesterday's range. So that's what we're still doing. Jay says, easy call, Charles. We are going up, down, a little sideways, but always buy low and sell high. I know you're making a joke, but for the people that don't understand that it's a joke, you need to understand the analysis I gave in the first 5 minutes this morning is crystal clear, extremely actionable, 100% certainty opportunities. You might have to wait for a little bit of information to understand which of those things is playing out, but it is rare that the market makes it that easy. I can't tell you if we're going to go higher today, go lower, or grind sideways. But I told you in that first 5 minutes exactly what to look for where to tell you what's going on. I told you we were going to fill the gap, and we did. I told you if we spent time inside yesterday's range, we were going to need to test support. We did. We got a bounce. And I said, if we can get above the overnight high, the previous day's high, then we'll get continuation. But we couldn't. So I said we need to come back down and test 67.57. We haven't done that yet, but I think we're about to in the next 2 minutes. So just because it sounds like I'm saying, the market could go up, the market could go down, the market could go sideways, doesn't mean I'm just randomly making stuff up. And again, this is for people that are new to the channel. It doesn't mean I'm just saying anything can happen and trying to make sense of it afterward. Before it happens, I'm telling you what is going to happen. I'm telling you what to look for. I'm telling you what would mean I'm right and what would mean I'm wrong. That's an edge. That's what trading is. It's being able to recognize what are all the things that could happen, and then how will I know which of those things? Once I know which of those things, then I know how to trade. Okay? So that's what the auction process is. it is pretty much always saying the market could go up, down, or sideways. It's like, it's always a possibility. And I want to know what it would look like. If I don't even think about it, if when the market opens, I see a gap up and I say, this market has to go higher. We broke out of balance yesterday. We got a gap up today. This is a sign of momentum. We left behind multiple single prints yesterday. We are definitely going to go higher. If I felt that way, I'd be long the market on the gap fill, right? I'd be buying that gap fill as support. What would I have been feeling for the last, 20 minutes? I'd be feeling a lot of pain, right? I'd be feeling a lot of worry, a lot of frustration. Is it going to bounce? Am I right? Am I wrong? It would be stressful to be in a long right now. So I'm glad I at least considered the possibility that we might need to come back and back test the balance area high so that I didn't get into a long, so that I'm not feeling pain right now. Don't get me wrong. I can still get long at that high. If we find support, come back up there, spend time and bring in volume, I can still get long. Just later on when there'll be a lot less pain. Just at the moment where it's ready to go higher rather than guessing ahead of time and then sitting through the pain of being wrong. That's the edge. The edge is not in knowing what will happen. The edge is in knowing all the possibilities and having a way to read which of those possibilities is happening. That is the edge in trading. And that is what we do in the Pirate Traders Brigade, of which most of you are members. And the reason most of you are members is because you won't hit the like button and tell the algorithm to send new people my way. Do it to it. Okay. So as we print the B period here, the market has just given us new information. Not only are we inside the previous day's range bringing in volume, look at where the largest volume nodes are. Are they above yesterday's high? No, they're inside yesterday's range. Again, that means chop and sideways and grind. Okay? It's bearish, not bullish. What else just happened when we printed the D period? We pulled the value area up against the low of the day. Earlier, the value area was up here. Now we know there's a higher probability this market needs to make a new low. When the value area is up against the low of the day, you're likely to need to make a new low. When the value area is up against the high of the day, you're likely to need to make a new high. So the market generated information is getting clearer and clearer every minute that goes by. And right now it's saying we have not found support yet. Let's take a look at the ticks, the old ticky ticks. Yep, ticks can't stay above zero, not yet. John H. says it's going to be a high doji day. I assume that means you suspect that we're going to have a big wick at the high. It is certainly possible, but we have no evidence of that right now. Like I said, right now, the most likely scenario is either that we're going higher or we're going sideways and just grinding on the balance area high. We have no evidence that we're going to have a massive sell-off today right now. Right now, I lean towards sideways, choppy, grindy day, which, by the way, is what I predicted at market open as well. Mo says, Charles, I have a question. I've noticed many times in my market pulse in Bookmap is going heavy in one direction, let's say red for this example, but the price holds and either does not go down. Does not go down. Yeah. Okay. So this is how you want to think about market pulse. Okay. For those of you that don't know what he's talking about, it is this little circle that we have down here. You also might hear some clicking noises, in the, in audio, like you might hear some clicking. That is this program right here. And the way I have mine set up, I'm reading the volume pressure imbalance. Now, of course, depending on how you have the settings, there's a bunch of different things you can put a market pulse on. It's going to have different it's going to be giving you different information. But for me, the way I use it, using volume pressure imbalance, what is it basically measuring, right? It's measuring how much of the volume at this exact moment, at this second, how much of the volume is long versus short. Okay. So if way more of the volume, oh man, I just lost, hold on one second. My Epic Pen has been letting me down lately. There we go. Okay. So, so right now the volume pressure is going green, right? So that means at this exact second, at this exact moment, there's more people going long. Okay. If it gets all the way to 95%, meaning 95% of the orders that are filling at this exact moment are long or short, it makes a little noise. It goes, and you'll hear it. It'll happen at some point. What is happening in that moment, right? It's what we call a sweep of the order books. There is only one way that you can get 95% of the contracts that are trading to be all on one side of the market, and that is during a sweep. When the market is basically just blasting through all the stops that are at a particular level very, very quickly. And they're putting in so many longs at that moment that it's way more longs than shorts. And so the market breaks through that level. It sweeps through it very quickly. Okay. So when you see that you get to that extreme level, that's what you're seeing. You're seeing a sweep of the order books. So then you say to me, well, price is coming down, and then we get that big red, sweep, and the market turns around and heads back up. Yes, that can happen. So basically what that sweep means is something is about to change. They've just cleaned up the order book, so now they can go up or down. So, if you're pushing into a level and you sweep, that may be we just broke through it and we're about to head much lower, or maybe we just found support and we're about to head higher. And so I don't even worry about whether it's green or red. I don't even watch this. I just listen for that clicking noise. And when I hear that clicking noise, I don't care whether it was buyers or sellers. I just care where is the chart at that moment. Because that's what that clicking noise means. It means something just happened. Something's about to change. So if we're at a pivotal moment, that's important. So right now, yesterday's high has been acting as resistance, right? It's been holding the market down. So if it pokes through, it might sweep. And all of a sudden, this will be really green. And we'll poke through. Well, then that's a moment to say, I'm no longer bearish. I'm looking for support and continuation higher. If we don't get support, then I come back to being bearish. If we do get it, then I become bullish. It's that change in the market. That is what that is telling you. That something new has just begun. Better take a look at your screen. Better figure out what that new thing is. Is it buying? Is it selling? Is it a reversal? Is it a continuation? You got to use your brain parts to figure that out. But this tells you when to look. Speaking of which, more resistance means more chop. But what do we like about this resistance? That we keep getting exactly at yesterday's high. What are we feeling good about that? We don't know when the market's going to come back up through it. But if it does, there's going to be a lot of sellers to squeeze there. Because they just keep selling and selling and selling. And they're not really getting anything for it. Not yet anyway. So if the market's able to break through there and sweep that order book, all of them are going to leave, all those sellers. So right now, I've described myself as neutral, looking for support at 67.57. If we get it, that would be bullish. Oh, so choppy, very choppy. They are trying to squeeze on both sides. So when you see the market get in these little ranges like this, it pulls back into the previous day's range and just grinds and grinds. Just look at this. Down, up, down, up, down, up. Just grinding and grinding inside that range. Why are they doing that? Because each time they go down, people start to sell. Each time that they go up, some of those sellers get squeezed, and then people start to go long. And then they come back down and some of those longs get squeezed and people start to short. And they just keep doing that. And each time the market does its little chop up and its little chop down, you're creating more and more old business, right? You're getting more and more people into trades. And then when it breaks out of that range, you can squeeze all those people. So we start looking at the lows of that range down here around 67, 63. And we say, if we get below there, we're going to squeeze all the buyers that have been buying on the way up, right? That'll get us a liquidation. Boop. Just like that. We'll be down at 67.57. Or if we get above the upper end of the range, let's say 67.70, well, then we squeeze all the sellers that have been shorting the lows the whole time. And then we get some short covering. Boop. So these little tiny ranges can be frustrating when we just keep chopping and chopping and chopping in them, but don't be upset. It's great information that you can use in your trading. Speaking of which, we're at that low right now. Are they going to do it again? Are they going to chop back up and try to get more people long? Or are they about to break and get down to 67.57? Watch this space. If you guys are first-time viewers of the channel here today and you're enjoying what you're watching, you might consider joining the Pirate Traders Brigade. There's a link in the description of this video. It is just, piratetraders.io/join. It costs $20 a month, but you get live streams like this every single morning with me giving you my insights and my opinions on what I think the market is going to do. So if you're enjoying the show, first and foremost, ask me lots of questions so that I can teach you something here for free, and then think about joining the brigade so you can get access to this every day. It's a pirate's life for me. Might be for you too. Okay, there's your liquidation. Boop. Just took it out. So there you go. You just squeezed all those buyers that were, the buyers that were getting in up here, that were chasing price up. They're getting stopped out now, and we're pulling back into support. And they're saying, the market is coming for my stops. That's what they're saying. They're blaming the market. They're saying, it's not my fault. It's the market's fault. It's coming for my stops, man. Instead of just recognizing the range, recognizing exactly what happened. We filled the gap. We stayed inside yesterday's range. We just brought in volume. There was no reason to be long. And that the location of their long set them up to easily be squeezed. They'd be much better off buying support rather than chasing price in a chop zone. Good morning to Trevor. Mo finishing his question says, or actually moves up. This is because of the fish. They are fishing in one direction. Yes. You could think about it like fishing, like they're poking through a level to see. So like they poke through that current low to see if they're going to get new selling down there. And if not, boop, they come right back up. You could think about it like that. But really what I like to think about, as I said, is just it's an opportunity for there to be a change in the market. You could get that sweep of the order books and then you get new selling and continue lower. You can get that sweep of the order books and then turn around and come back up. You can't predict at the moment you get the sweep, which is going to happen, but you can be watching the information. And then once you know it's new selling, you can catch the move down then. Or once you know it's a reversal, you can start to catch the move on the way up. Now, if you want to buy the low of the day or sell the high of the day, then I'm not the right person to teach you how to trade. I need that confirmation. I need to watch that high or low be formed, then see the follow through before I can enter the trade. The good news is you can make a lot of money that way. You don't have to buy or sell the high or low. You can catch a piece of the move in the middle. And it turns out that's a lot easier than trying to buy the high or low, in my humble opinion. Ahoy to Willie T. Frito in the house. He says NQ held yesterday's high of the day. Ooh, let's go take a look. That would be bullish, but I suspect that's no longer true. Ooh, you're right. Oh man, that's bullish. Look at that. So what is the difference between the ES and the NQ so far this morning? Both markets opened and immediately headed down and filled the gap. So they did the same thing there. But what was different about the ES and the NQ? The ES filled the gap and has just stayed inside the previous day's range. We've just been going sideways ever since then. But what did the NQ do? It dipped into yesterday's range and it spent very little time inside yesterday's range. The volume tapered off, less and less volume as they went deeper into yesterday's range. So there are no buyers stepping in on the ES. It's just two-sided trade, but there are buyers stepping into the NQ. So the NQ is now bullish as long as they stay above yesterday's high. Now that will change if they come back inside yesterday's range, because then guess what's going to happen to all those buyers? Everybody that's been buying in here. If we come back down into yesterday's range, they get squeezed. You liquidate, you get new sellers, and then it looks just like the ES. But at this moment, I would describe this as bullish as long as they stay above 25,037. Again, I'm still neutral on the ES. I do not think we've made the low yet. Laura in the house. Good morning to you. Been a while. Welcome, welcome. Jason in the house. Good morning to you. He says, didn't know we're public? Oh, yeah. The whole world is watching. Well, 89 people from the world are watching. But they could be anyone. Oh, boy in the house. Good morning to you. Mr. Ree is here. Welcome, welcome. I don't know how to say this name. Goinja says, could you share your TPO settings, session time for regular trading hours overnight? I'm trying to match it in Sierra chart. Yeah, you can just basically, the way I have mine split out is like this. I have two separate profiles for what I call the overnight and the regular trading hours. The regular trading hours is 9:30 a.m. to 4 p.m. And I know a lot of people don't do it that way, but that's how I do it. 9:30 a.m. to 4 p.m. That is my regular trading hours. And then 4 p.m. to 9:30 a.m. the next day, that is my overnight range. Okay. I use 30-minute TPOs. So each letter is representing a 30-minute time period. What other settings do you need? Oh, tick increment. I'm currently in 2 tick increments. So essentially each letter represents 50 cents in terms of the price. My value area is set to 70% of the day's range. And my value area is based on TPOs, not volume. So it's based on time and volume, not just volume. And And my point of control is a time point of control. So that is going to be whatever level the market spent the most time closest to the center of the range. So at the moment right now, we're only an hour in the day. So we got 2 TPOs. That's the most. And so what level has 2 TPOs? That's the closest to the middle of the range. It's right at halfback. That's our POC. You can also head to the website. And if you click over here on Learn, and then you go to Market Profile Glossary, you can kind of see some of this stuff laid out. If you have confusions about what is a TPO, what is a point of control, what does he mean when he says cumulative volume versus intraday volume? What is a value area? Like if you want to learn some of these terms so that you can understand what I'm talking about, just head to piratetraders.io /glossary, and you'll be able to find that there. Or you could, like I said, just click on Learn and then Market Profile Glossary right there. Pete the Cat says, the ticks chart is based on ticks per 15 minutes because on NinjaTrader or TradingView, the ticks are a fixed number, like 150. Okay, so this is really confusing, and I hate it that it's like this. But there is something that is called a tick chart, which is like you say, you can basically set it up to use a certain number of ticks price-wise, a certain number of a tick being 25 cents, right? You can have a certain number of ticks to represent each candle on your chart, so to speak. That's called a tick chart. When I refer to the ticks, I'm referring to the tick chart, which means the symbol for it is TICK. And what it is doing is it is measuring the volume of buyers versus sellers, right? It's measuring the number of stocks going up a tick versus the number of stocks going down a tick. The breadth is the volume. So the ticks are just saying, out of all the stocks that are in the NYSE, every single stock in the exchange, are more of them going up a tick or are they going down a tick? If at this exact moment, more go up a tick, then it'll pop up one. It'll go up a little bit. If more go short, it'll go down. So it's essentially a way of seeing in real time, what's happening in the stock market. Are more people buying or selling in this moment right now? And that, of course, helps us to understand what comes next, right? Okay, speaking of which, we are now pulling into the first potential support, 67.57. Will we get a bounce or will we not? I don't know. Your guess is as good as mine. But what will tell us if we're getting a bounce? The ticks. The ticks will stop going down and they'll turn around and start going up. If they turn around and start going up, for example, maybe even get all the way back to the zero line, that's a sign that buyers are buying support. If it doesn't, if it keeps pushing lower, that's a sign that sellers are continuing to sell and we're going to test the next support. This to me is also a good moment to figure out larger perspective for the day. I'm now asking myself the question, are we going sideways? Are we going to bounce and head higher or are we going to fail and go lower, right? If we don't get a bounce right now at this support, we're probably not going higher today. Probably that's it. That's the high of the day. If we do get support, there's a chance. So let's see what happens here. And I mean right here, right now. Right here, right now. Says, do you think that gold is more volatile than the ES lately? No, sir. Gold is in the cleanest trend you could imagine. So if by volatile you mean two-sided trade, no, not at all. Yeah, this is very clean. So, I mean, we were talking about this in the channel. This was a very large, if you're a member of the brigade, on this day, we were talking about this breakout and saying it was going to make a move to the upper end of this box. Okay, so that's a balance area that broke out, by the way, which is what we're talking about on the ES today too. This is where we are on the ES right now. We talked about balance area. This is the back test of that breakout. Anyway, so that first move made a lot of sense, right? We expected to get double the range of the balance area. This is just something we do day in and day out, the way we read markets. Once it got to the upper end of the range, it got that extension. What happened? Things slowed down and it started balancing again. A much tighter balancing range than this one, but the same concept. What happened when it broke out of that range? Momentum. A dip, momentum. So this to me is actually very clean, very easy to read. Whereas the ES is very confusing a lot of the times nowadays because there's just so many bots. So much hedging of market makers as well. Okay, so there you go. We got to support, and what did the ticks do? They were down here. They were at like negative 600, and they popped back up. So we got some buyers. Now, does that mean this is the moment we reverse and go to the moon? No, of course not, right? We would need to see the ticks get all the way above the zero line for that. But it's just a sign that we may not be having that big sell-off day. Getting the bounce here increases the odds of the sideways day because we are bringing in buyers. Not enough to completely reverse things, but some. Says, I know you previously didn't like gold much, having found it a bit too slow. Yes, and I still wouldn't be day trading gold right now. That would be a swing trade. It's not volatile enough for day trading. Just for me. Like, if you like it, great. I'm not saying that it's not tradable as a day trade. It's just not as interesting. You know what I mean? You got to wait a long time for a setup. You got to wait a long time for it to play out. Whereas with ES, you can recognize, like a few moments ago, you can recognize that little, whoops. You can recognize that little chop zone right there and straight up say, if this breaks, I'm going to short. And you can just like, boop, make, a couple points in a minute right at the moment that breaks. If you're a scalper, if that's your style, you can, if you're a day trader, wait for it to pull back into support and get long for the day trade. So it's just like there's a lot more opportunities with the ES intraday than there is on gold. But I'll tell you what, looking at inflation recently, I really like gold. Just not for day trading. Sweet says, I look at the lines as support and resistance and get stopped every time. Yes. So this is a common thing that a lot of traders come to me and they say, I enter a trade and then I get stopped out and then the market goes where I thought it was going to go. Now, if you say to me that happens sometimes, I would say to you, suck it up, Buttercup. Welcome to trading. Like, it happens sometimes. You know what I mean? Sometimes you're going to buy support and then it's going to make one little poke below to sweep the order books and then it's going to reverse and go where you want it to go. So just deal with it. You know what I mean? Every job has things about it that suck. That's one of the things that sucks about being a trader. Sometimes the market will get you. It'll sweep you out and then it'll go where you think. But if you said to me, it happens a lot. If you said to me, it is frequent that I enter a trade and I get stopped out and then it goes where I want to go, I would offer you one ridiculously simple piece of advice. Why not start putting your entry where you currently put your stop? So if you watch a support level, and you decide I'm going to go long, I'm going to put a limit long here. and then the market comes in and maybe it bounces and then boop, it pokes through and it goes where you think it's going to go anyway, why not just start putting your entry below that support level, right? Now, I know what you're going to say. Well, Charles, that's annoying because what if it comes down and it finds support and it goes without me and I'm not in the trade? Well, I would say you told me most of the time this happens to you. So sure, you're going to miss some. You know, any trade that you're currently getting in that works, you're not going to be in those trades. But the ones that you're in that will work, if you wait for the sweep first and then you enter, it'll be most of the time that it works, right? So most traders struggle with recognizing what are support or resistance levels. Then they struggle with executing trades at those levels, whether they should put the order in ahead of time and just let it fill, or whether they should watch for a bounce and then enter at market. A lot of traders really struggle with that, the difference between those two strategies, right? And then a lot of traders struggle with stops. And quite frankly, almost always it is just that they are using too tight of stops. And there are times where you can take a trade and you can have a 1-point stop and it's a high probability trade and it's awesome, right? But there are also trades where you got to give the market 20 points of breathing room. And the question is, do you know the difference between the two? Do you know the setups where you got to give the market room because it's going to sweep the order books over and over and over? Or do you know the trades where you can execute with precision at an exact level? Now, you can become an expert on one or the other, or you can learn to do both. But if you're not thinking in that way, if you're not saying, what is the market behavior right now? Do we have momentum or do we have balance? Is the tempo fast or is it slow? Is there a lot of volume or a little? Is the old business long or short? If you don't have this context to understand what the market is doing, it's going to be much harder to execute trades because it will look like the market is doing something and then you get stopped out and it does it anyway. So you got to have the full viewpoint of the market. You have to have nuance. And most importantly of all, you just can't keep doing things the same. So if you do get stopped out a lot, you got to change how you trade. You got to start putting your stops in a different place, or putting your entries in a different place, or waiting a little longer to enter the trade, or entering the trade as a limit order instead of getting in at market, or entering the trade at market instead of getting in at limit. Like, you have got to adjust something. The worst thing you can do is recognize that something isn't working for you and just keep doing it. That is really the crux of what holds so many people back in trading, is the inability to change even if they recognize where they have a problem. Fighter pilot in the house, good morning to you. He says, no guessing, no gambling, reading released market-generated information at specific levels and positioning accordingly. It pays off exponentially as you progress. We obsess over this idea of market-generated information, meaning we're not guessing. We're saying, what is the market actually doing right at this moment? And with that information, we say, what are the probabilities based on what's happening right now for what's going to come next? And based on that information, we're saying, what are the best ways to execute trades based on this information? So here's an example right now. Personally, I would not have shorted the resistance up here, even though at that moment, I felt very confident we were coming back to test these single prints. I felt extremely confident that we were going to come back and test these single prints, but I would not short there. Why? Because it was a liquidity trap. Because of the balance that was happening there, they could have very easily poked up, boop, swept that order book, and then turn around and come down. So that was not a good place to get short. Okay? Same thing with the support right now. I'm watching this level for support. I don't have a limit long right here. Why? Because of the context of the situation. So far today, it's been bearish. right? So far today, we pushed into the previous day's range and we're just spending time and bringing in volume. So I don't want to be going long. Now I want to watch what happens there. I want to look for that taper. I want to look for the change in the ticks, right? The ticks have not been able to get above the zero line. That's another reason not to long yet, right? But even if there's nothing for me to do right now at this moment, once the clarity comes, let's say, for example, the market pushes down below the balance area high, pulls back up, and then we get cessation of the trend. Let's say in the D period. Let's say in 30 minutes from now, we come back up and we get above the C period high. Then I can go long. Now maybe I didn't buy the low, right? I didn't catch it right at its lowest possible level. But at that moment, if we dipped into the previous balance area, popped back up, and then got cessation, at that moment there's a very high probability we're coming back up for the opening price. So at that moment I could enter a trade, and the probability of it working will be much better than entering the trade right now at support. And I know that sounds confusing, but just because the market has support doesn't mean you should be going long. You need the context of what is going on. Sure, we're getting support right now, but we're inside the previous day's range getting new selling. So that's not a time to go long. If you get the support and then change that, you get the buyer stepping in, you get above a previous level, then it's a time to go long. And what you will find is your win rate will go way up if you think like this. If you wait for the market to tell you what it's doing first, you wait for the best possible opportunity to enter the trade, you will win way more often. Now, maybe you'll only make, 10 points of profit instead of making, 30 points of profit, right? But you'll win more often. And that's what our goal is, a high win rate. Okay. We just don't want to lose. That's really the goal of trading, is just don't lose. Because when you lose, you make it harder for yourself. Okay. So we're looking for high probability opportunities. And the only way that exists to find those is to use market generated information and probabilities combined with discipline in execution of trades. And it's not easy. I wanted to short up here. I wanted to long down here. But I have to be patient. I have to wait for the A+ moment to enter the trade, because I may only take one trade today. And I want that one trade to be a profitable one. Because if that one trade is profitable, I can be done for the day, because it's a green day for me. And so that's my goal, to have a green day, to make a little bit of money every day. So I just want to be very cautious and not get into a trade and start losing money before that high probability opportunity presents itself. And so far today, the only high probability opportunity that we've had was the gap fill, was shorting the opening price, targeting the previous day's high. Since then, it's a gamble. And I just don't do that. I don't gamble. Okay. So take everything I've said prior to this and just delete it for a second, because I don't want to get overly confusing with all of this. Right now, we are bringing in support, but it's not enough to reverse the market. Why do I say that? Because of the exactness of where they reversed at. They reversed exactly to a tick at the base of the single prints up from yesterday. Not once, but twice they did it. And why did they do that? Because right now, people see the bounce, they see the support, and they go long. They're thinking, I'm buying the low of the day. I'm a genius. That's what they're thinking. But where are they putting their stop? If that's what they're thinking right now. Right below there. So what does the market know? If it can bounce and move away from this level, it's going to get more and more people going long and get more and more liquidity below that C period low. And the more and more liquidity, the more likely it'll turn around and come back down. So yes, we are getting support, But this is not the time to buy. Not yet. Because of that poor low. Context, folks. You gotta have context. This is one of those times where you wait for the sweep as opposed to predict the move ahead of time. So I'm going to go ahead and delete this as a support level because I don't think it's going to hold. I think we need to come down and test this balance area high around 67.54. I will also remain neutral even if we poke down one more time. But if we do not find support here, I'm bearish for the rest of the day. Okay. So again, did I sell the high and in the whole move? No. But if we don't find support around the balance area high today, this market's going much lower. Like I'm talking in the next 2 or 3 days, we're going 50 points, 100 points lower. Okay. So this market's going to make a big move if we can't find support, in the next few minutes around 54. So I remain neutral until I find out what happens there. You guys see it? I told you it was happening. Look at these buyers stepping in. They're seeing the bounce. They feel like geniuses. They're not thinking about the fact that their stop is in the exact same place as everyone who went long yesterday, everyone that went long 30 minutes ago, and everyone that's going long right now. They don't realize that they're building the liquidity that's going to cause them to get stopped out because of where they're choosing to enter. These buyers right now just don't understand context. The market's going to teach them. It's going to come back down and it's going to teach them. Will they learn from that? Will they change how they trade tomorrow based on it? Probably not, which is why it'll work again the next day, and it'll work again the next day, and it'll work again the next day. Because people don't learn. They don't change. They just keep doing the same things that don't work. Man, I can't even keep up with the chat today. Tom says, do you sing different songs each day or is it just the Chop Song Daily? Well, the Chop Song's a mandatory daily song, but I will occasionally improvise if the mood hits me. Jared says, at this situation, what are your thoughts about using the levels of a breakdown using an orb report? I don't use orb, so I can't really comment on it. I'm pretty sure it has a statistical edge. And if it has a statistical edge, that's something you trade. You trade statistical probabilities being in your favor. It's just not something that I look at. Frito says, but is he really singing for us? That's a great question, Frito. Probably not. I'm singing because I'm friggin' weird, and that's what my brain does. It's probably not helping any of you. Mr. Knifeart says, is the volume pressure imbalance dial indicator on NinjaTrader or Tradeovate? Not that I am aware of, but it's worth a Google. I know that you can get something very similar that's basically exactly the same thing. If you pay for the the paid version of Financial Juice, they have this thing called Tick Strike, and you can't visually see it, but you can hear it when it clicks. Da 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 da. I don't remember exactly what they use to calculate this. There it is, right there. But it's basically the same idea. See, are we getting a sweep of the order books? Yes. Theirs is clicking before we get to that 95% rate, though. That's what I like about Bookmaps is I get to program when do I hear that click. And I only care when it's a major sweep. I don't care about the little sweeps. You know what I mean? I don't want to hear every little click. I just want to hear the big ones when it's 95+% of the liquidity, which is going to happen when we get below the C period low and we squeeze all those buyers, as we just discussed. There it is. You hear it? Did you hear those clicks? What are we doing right now? We're taking out those buyers. So those were the ones that trailed their stop. They bought the dip. As it was moving higher, they moved their stop up above their entry. They just got swept. Now let's watch the rest of them get swept. Sweeped? They get sweeped. Okay, it's a word. Is now, anyway. Ooh, another poor low. They're trying to convince you to buy again. Come on, buy the low of the day. Don't you want to be a genius? Yep, round 3. They're going to do it a third time. It worked here. It worked here. They're going to try it again. Another push away from the poor low to convince everyone to start longing so that there's even more food for the market down here. Even more liquidity. Boy, this market loves to squeeze traders that don't understand context. There it goes. Boom. You hear it? Click, 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 click. They just swept it up. Okay. So technically right now, this is bearish because this is what we call one time framing lower. We always start one time framing with the break of the initial bounce. So the initial bounce is the first hour of the day. Since the C period broke the initial balance low, that is a sign we have momentum down. Why am I not putting a red banner up? Because as I discussed, to me, anything above 54 is still bullish. This is just a back test of the breakout right now. So this does not necessarily mean we're going to trend lower all day. Now, if this keeps going, if we don't find support, then I know I need to be bearish. And that's fine because there'll be a big move to the downside and plenty of opportunity to make money if we don't bounce right now. Watching those ticks. This is where we want to see, and a bounce area high is not an exact level. So I'm not saying bounce at this exact moment, but just in this general area, we want to see taper and then price reverse. If we don't, it's new selling and we're bearish for continuation lower, probably all day long. Look at that VIX. Ooh, that VIX. People trying to buy them cheap puts. Man, couldn't get to 100 people today, huh? What's up with the YouTube algorithm? I'm fucking crushing it today with these calls, and they still won't send me 100 people. Rod says we could get a pivot at 67.44. It's possible. There is support at 48, and there is, a little node at 46. So sure, we could. But I would argue if the market wants to reverse, it wants to do it now. The more time and the more volume we bring in below 53, the more likely it's going to be a very big dip. Because what did we start today? What was the context we began the day with? Before any other conversation, what was the first conversation that we had? That there's one of three things that's going to happen today. That's our balance area. Let me draw that a little smaller. Oops. Okay, that's our balance area. So there's only one of three things happening today. One, we break out and we continue higher. Two, we chop and grind all day long on the balance area high. Or three, we start the process of heading down. Now, again, we're not going to get to the balance area low today. Look, you failed there. It took 3 days to get down. You failed there. It took 3 days to get back up. So I'm not saying we're going to go all the way to 66, 65, today, but I'm just saying that move down will begin today. It will look like this day here if we fail, or this day here, on the way up when we failed the low. So there'll be a big move to the downside today if it's not going to be one of those grind and chop days. And this is the moment where we find out if it's going to be the grind or chop. We're at that balance area high right now. So do the buyers step in? If they don't, it's very bearish. Intraday today and frankly, into next week, it's bearish. If we cannot bounce right now. Watching the ticks. I'm also going to take a quick look at the gamma to see what's happening to that big strike price we had. Oh, still there. Still got a magnet. 15 points lower. All right, that's new selling below the overnight low. We are officially bearish. The market is trending lower. Act accordingly. We are not getting that support we were looking for. We are not getting the ticks above the zero line. So now the next stop for the market to the downside is 67.48. So the way we think about this now is, first off, we don't short the low. We're not like trying to get short right this minute. We're looking to sell resistance. So there's two potential resistance levels. One is going to be the overnight low, which is 67.55. The next is going to be this node just above it, 67.58. If either of those hold as resistance, that is the reason to get short. The target is going to be backfilling these single prints to 67.48. And then we do what we call monitoring for continuation lower. It's pretty simple. We got three different levels here. Okay? This set of single prints, this set of single prints, and this weak G low. So if we backfill the first set, if we get to 67.48 and we bounce, great, then that's it. We go sideways the rest of the day. If we get down to 48 and we don't bounce and we get new selling, we're heading for 39. Okay? If we get to 39, we pass through in reverse, great. We go sideways the rest of the day. But if we get to 39 and we get new selling there, we're heading to 36. Same story. If we bounce, great. We go sideways the rest of the day. If we get new selling below there, we monitor for the next move to the downside. Okay? So that is where we're at now. We are looking to sell resistance, and we are looking for potential reversals at one of these three levels. If we don't get it, we know we're heading to the next one. Also, if we don't get the resistance, then I'm just wrong, right? If we don't get the resistance, then my original guess of we're going to spend the day grinding on the bounce area high is true. So we're watching for that resistance right here at 55. And like I said, just above at 58. And of course, those ticks getting poked back down with new selling. Jason says, it's liquidation time. Come on, y'all. It's liquidation time. Any Flight of the Conchords fans out there? I guess not. That's cool. That's cool, bro. You hear the clicking? That's a liquidation time. Maling says, I joined the session using the link from the email, and my screen on YouTube, it shows 9 likes, which means the likes from people joining from your email link doesn't show up. I think if you refreshed it, it would show you. I think it just only shows you however many likes when you get there. But try giving it a quick refresh, and I bet it updates. We're at 73 likes right now, which is honestly not bad. 87 people hanging out and 73 likes. I don't understand what the algorithm is mad about. You guys like me. Why won't it send me to anybody else? And I know the answer because I'm not public enough. You know, the YouTube algorithm, the more you're public live streaming, the more people it sends. So if I was here every day publicly, it would send way more people. Intraday Predator says, where do you define your stop? So I have, everybody has to find their own way to trade. Okay. You have to find your own way to decide what trades to get in terms of what software you like, what indicators you like to use, what sort of style you like to trade. Do you want to be a scalper? Do you want to be a day trader? Do you want to be a swing trader? You got to figure out what's right for you. And so I have figured out what's right for me, and it's not easy to teach. It's not easy to define, right? So we talked earlier about the idea of sweeping the order books, right? There are certain levels on the chart where if the market were to pass through those levels, it would change things, right? It would convince people that are bearish to suddenly become bullish or vice versa, right? So I always try to put my stop just above or below whatever that particular level is. So for example, let's say I wanted to go short today at 67.58. Okay. I might be wrong about that being the exact level. where the market is going to reverse, because there's also resistance here and there's resistance here. Okay. So I don't want to put my stop in there, because then I'll get stopped out and they'll still go where I thought it was going to go. And that's the worst case scenario. You don't want that, because not only do you lose the money on the stop, but it has a psychological effect. So if I was going to short at, 67.58, I'd want to put my stop above the half back. Okay. I'd want to put my stop up there. Why? Because if the market reverses and it comes all the way back above the half back, which by the way is also the C period high, which means if it reverses after, or in the D period, that's cessation of the trend, right? That's when we know, that's when the market generated information tells us we're definitely done going down, right? Is if we get above that C period high. It's also the half back, which is a common resistance level. It's also a major node where if you look, where did the market run out of steam yesterday? Where was the resistance? It started right there at 64 and it tapered off. Where was the support in the overnight as they were trying to head up and make those new all-time highs? That same level was where that started. So to me, this area right here is a really important level. This is an area where things change, where the current momentum, which is momentum to the downside, is over, right? It's just, that's where it's over. So, okay, let's say that's what I want to do. I want to take that trade. I want to short there. I want to put my stop above the half back. Well, now I need to decide whether or not I can get into that trade. I have found I have a lot better results and I make a lot more money if I have a system for how I enter the trade. So I don't just get in a trade purely because I'm seeing support or resistance. I don't just get in a trade because I have a good place to put my stop. I get in the trade because I have, a system, or sorry, let me backtrack. I have a system that says I can only get in the trade if it follows the system, right? So for me, if I wanted to get into this trade right here, that means I'm risking potentially losing 9 points. Okay. If I'm going to lose 9 points to be able to enter the trade, I have to be willing to make at least double. I have to be willing to make at least 18. So if that's the case, I would have to be targeting this weak reference down here so that I know my reward is more than my risk. And that's fine. That's a good trade. We got a weak reference that needs repair. We're back inside the previous day's range. So that's fine. I could take that trade. So I'd be getting short here. I'd be putting my stop up here, and I'd be putting my take profit down here. Some days that stop might be 2 points away. If the market were to come back up to here and I was flat, I might consider shorting right there and only having a 2-point stop, right? But in this case, I'm shorting here, and so I have to have a 9-point stop. So what's the difference? Position size. If I'm taking on a 9-point stop, I'm going to have a significantly smaller position than if I'm taking on a 2-point stop, right? And that's what I do. So I don't choose my stops based on like an exact number of ticks or an exact number of points. I choose my stops based on the best strategic level to get out of my trade. I choose my stop on the level where I'm wrong, where my trade isn't going to work. And then I just manage my position size accordingly so that the more points of risk I have to take, the smaller the position size, and vice versa. And I try to never ever risk more than 2% of my account size in any one trade. So that, however many contracts I would be getting short there, would be based on what is 2% of my account if I had a 9-point move. I'm sorry if that's confusing. I know a lot of people, they can't do that. They can't think like that with trading. They need things to be much simpler and more exact, but that's just how I do it. That's just what works for me, is figuring out what is the market doing first. Okay, we got momentum down. We're trending lower. I want to get short. And then the next question is, where's my stop? Where do things change? It's as simple as that. Okay, so we got the one time framing. We've continued the one time framing in the D period. That is bearish to see. We're now at that base of single prints. So what do we talk about? This is a place where maybe the momentum will run out. This is a place where maybe the market's going to reverse. we can't predict whether it will or not, but this is just a location to watch for that reversal, to watch for the taper, to watch for the ticks. If we don't reverse here, then we're heading for 67.39. And we'll play the same game there. Well, here we are. Did we reverse? Nope. So we still have momentum down. It's beginning to look like a look above and fail of the balance area high. It's too early to say for sure, but it's scary if you're a bull. 'Cause this market could die. So again, that major strike price, that 99 percentile strike price, 12 points below us. And it hasn't changed at all. Still a magnet. It's liquidation time. Come on, y'all. It's liquidation time. But Charles, who's getting liquidated? The buyers. I thought they already got liquidated. I thought they got liquidated when we broke the overnight low. Well, now we're starting to liquidate longer term traders. Now we're starting to liquidate the swing traders, right? The bigger group, the bigger liquidity, because now we're starting to re-enter that balance area, right? And what happened the last time? Big move down. So those swing traders are starting to say, I don't think I want to be long anymore. And so each tick that the market moves lower, we're going to start liquidating more of them. Oh boy says, what does gamma look like right now? I imagine it hasn't changed since the open. We're probably still in that light blue zone. Yeah. So for the gamma specifically to give you a big edge, it needs to be like very clear. Like the whole screen looks purple. You know what I mean? Or the whole screen looks red. Then you know. Like obviously the more purple, the more blue it is, the more it's likely to be pinned. It's likely to be like choppy. And if the more red it is, the more likely it is we're going to get big, long, exaggerated moves, you know, bigger trends. So as far as gamma is concerned, I don't see an edge here based on that. But we did talk about the delta pressure, which is showing us support below, but not yet. We're not there yet. We got another 10 points to go to the downside. Boy, somebody called for a reversal at 44. That person's feeling good right now. Basil says, how did you come up with the target of 67.39? So it's what we call a weak reference. Again, if you head to piratraders.io and you just look at the glossary, it explains in detail what that is. But essentially, a weak reference is just an unfinished auction. Another way to think about it is like there's stops there, right? There's business down there. If the market can get to it, it knows it can fill orders. And so it's like a magnet. It's just kind of like it's there. It's a magnet. It doesn't guarantee the market is going to get there, right? But it just increases the odds that if the market is going to keep going down, that's where it's going to go, right? So when I'm seeing momentum and, we were looking for the bounce at the base of the single prints and we didn't get it, well, then what's the next place we could get it? Once we get rid of that magnet. You know what I mean? So that's the target. And it works. It works like magic. When you have momentum in a direction, whatever weakness, that's the target for where it's going to go. So for example, we could call the B period high a weak high right now because it's exactly at yesterday's high. So we could say that's a weak B high. Do we care about that weak B high right now? No, because we're trending lower. Right now, the momentum is down. So magnets above price don't really matter. Okay. Now, if we start to have a lot of them, then they'd matter. But right now we just have 1 week reference. Who cares? Right. Actually 2 because the overnight high is weak as well. But anyway, but right now the momentum is down. So we're not worried about that. We're looking for resistance, right? We're looking for where is this thing going to run out of steam and keep going where it's going. We always want to go with the trend. Okay. But now let's say, we get cessation of the trend. Let's say we get some resistance, we come back down, and then in the C period, we come up and we get above the D period high. Well, now we no longer have that momentum down. Then what becomes the target? Getting back to that weak reference. So weakness is just a magnet, and it only really matters when you're heading in the direction of that magnet as a target for a place to get to. Speaking of magnets, another one is when you leave behind single prints. We are now coming back to backfill those single prints. Charles, isn't this bullish? The market is going up. Not as long as we're below the base of those single prints. It's just the market coming back to clean up that unfinished auction. And as soon as it does, what's probably waiting at the base of those single prints? More sellers. Why do I say that? Why do I assume there are sellers waiting at 67.56? Because the sellers are in control, because we have momentum down. So the sellers want to get short. Where are they going to do it? Right there at the base of those single prints. We got 96 people hanging out. We're doing it. We could break 100. Maybe if somebody were to, for example, post this on their social media. If somebody were to go on Twitter and be like, hey guys, I'm watching this dude Charles and he's ridiculous. Check it out. Maybe that would send a few people our way. Hustler Forever in the house. Good to see you. Welcome. Thank you for the support. Percy says, does the singing come with the subscription? Is it optional? Boy, I bet you wish it was optional. I bet some of you really wish it was optional. But you got to take the bad with the good. That's how life works. You want the TA, you got to take the singing. Jad says yesterday all day up and today maybe all day down. Yep, you're right. Now, I'm not saying we're going to have an all day down day. As I said, maybe it'll just be 67.39. Maybe it'll just be 67.36. But I'm just saying everything so far today is leading up to the potential of an all-day down because of the look above and fail of the balance area high. Because we have momentum down now, both intraday and on a swing trade basis. And that's momentum on multiple time frames. So it could go for hours. It really could. Frito says, I have an extension on my browser that automatically mutes the singing. I'm sure the other people in the brigade would love it if you shared that in the Discord. Tom says, can we get a discount because we have to suffer the singing? No, but I'll double your price. I'll punish you for such comments. Massive says, Arr! Welcome aboard, Massive. So a little pop quiz for the chat here. The market just did something, and I'll give you a hint. It was with the recent bounce. That increases the odds we still have momentum and that this market is going to keep going lower, let's say for the next half an hour or whatever. Can anybody tell me what the market generated information just gave us that increases the odds of momentum lower? Croco says he posted my Discord channel in a large, my YouTube channel in a large Discord group. Brother, thank you. I really appreciate that. Malcolm got it. He nailed it. Left behind the single prints. So as we discussed, when the market made this reversal right here and it started to come back up, it was not bullish. We still had momentum down. It was trying to backfill these single prints, but it couldn't do it. Look, it reversed just a couple of points away. Why couldn't it just make that one extra little point to the upside? Why? Because we have momentum down. Because the sellers were so eager to get short, they couldn't even be patient enough to wait for it to get back to the base of those single prints. So leaving that behind tells us we still have momentum lower. Okay? That increases the odds that when we print the E period, it's going to make a new low. How slow can you go? All right. Well, while we watch the market slowly melt down, does anybody have any questions for me? I don't like it to get boring on the public YouTube. It's not good for the algorithm. Ask away. No questions. All right. Oh, here we go. Jason says, Charles, is the overnight all-time high a magnet? Great question. Yes, it is. So anytime that we see the market make an all-time high during the overnight market, it's a weak reference. I would say this one's a little bit unique because of the look above and fail at the exact same time. I wouldn't worry about it as much. You know, if we keep trending lower all day today, I wouldn't get fixated on that. But yes, it is weak. So whenever the, market starts to build momentum up later on, then that will be a weak reference. And so you say to me, well, Charles, why do you think that? Why do you think purely because we did it in the overnight, it's weak? Well, just because every time ever in the history of the entire stock market that we've created a high in the overnight, we've always come back for it. The question is how quickly, right? Often we come back for it, the same day, right? Or the next day, like pretty soon. But sometimes it does take like 2 months to come back for it. So take that with a grain of salt. But every week high, every high created in the overnight in the history of the stock market has always been repaired sooner or later, 100% of the time. So do with that what you will, Malcolm says, can we take a look at the Q? Yeah, let's do it. I assume it's not still trending higher. I assume we're not still above. Dude, that's really not that bad. So yes, the Q is bearish because it's one time framing lower, but it's still not that bad. They're still just poking into yesterday's range. And what has happened every single poke in the A period, in the C period, and now in the D? What has happened every time they've poked into the previous day's range? They pop back up and out. So people are buying tech right now. They're buying the dip on tech. So it's bearish because it's trending. We probably don't have the low of the day yet, but it's not the same thing as the ES, which to me, like I said, could have a trend lower all day for all we know. This one's bringing in buyers. I would consider the current low to be extremely weak, okay? Because it was not only the low of the overnight session last night, it's also just one tick off from the J period single prints from yesterday. So there's weakness here. So I don't necessarily think the low of the day is in, but it is less bearish to see for sure. So you're now looking for resistance around 65.56. You want to see the market get back down below 25.027. And if you get new selling below 27, that's when you head down to repair that weak low. Kathy says, can we take a peek at the strikes on spot gamma? Yes, we can. Hasn't really changed. Still there. Still 99 percentile. Still a giant magnet. Remember that these options levels, it's not like the market goes straight to them in like 5 minutes. These are kind of things that play out throughout the day. So that just tells us we likely still have, another 15 points to the downside. As long as it doesn't change, as long as it doesn't disappear. There is something worth talking about here, though, when looking at the delta pressure. So let me just rewind back to the market open. So this is the market open right here. This is 9:30. What did we have in terms of delta above and below price? We had resistance above. When you've red above price on terms of delta, that's resistance. When you've blue below price, that's support. But what has happened as the market has been selling off today? Look at the blue. 9:30, 9:40, 9:50, 10 a.m., 10:20. All of a sudden, we're starting to get blue above price. What does that tell us? Blue below price is support. Blue above price causes an acceleration of the buying. So essentially what this is starting to tell us, and it's very light blue. It's not like it's a strong, like this is bright. That's very strong. This is very subtle. It's more black really than it is blue. But what that tells us is if the market were to reverse right now and it were to start to go back up, market makers would have to buy the market as a way to hedge. So that could actually cause acceleration, even right back up to the all-time high. But that's not something for us to worry about right now because the market is still trending lower. It's just something to be aware of, to notice that if things reverse, it could reverse hard. And that's changed since 9:30 this morning to now because of changes in market maker structure between 9:30 and now. Their risk profile has changed. Pete says, in your market profile course, do you go into NQ settings or just ES? Just ES. So I don't trade NQ. So I'm not an expert at NQ. I sit here all day, every day, staring at one chart. So I'm really good at reading that one chart. I can tell you exactly what are the best settings for that one chart. But unfortunately, I can't tell you with NQ because I would need as much screen time. I would need as much experience trading NQ every day. I think generally what I've heard from people in the chat is that they like 4-tick increments as opposed to 2-tick. But other than that, I don't really know. And it's the same thing is true with any other chart that you want to trade. So like the theory remains the same with every chart of the auction process, right? You bring in buyers, you bring in sellers, you squeeze people here, you get breakout there, blah, blah, blah. But the specifics of like what is a weak reference, is different. So if you're trading Tesla and you're looking at the market profile chart, a weak reference might be if it's within $5 of another level or something. It might not be 2 ticks the way it is for the ES. And so you just have to, get some screen time in, get some experience, experiment, figure out what works and what doesn't, and make adjustments as you go along. If you have a larger tick increment and you find that you're missing moves, then you probably want to make it smaller. If you have a smaller tick increment and you're afraid to enter a trade because it seems like the market's moving too far too fast, then you want to go to a higher tick increment and you just kind of tweak it and play with it because it's going to be a little bit different for each stock or whatever, each different chart that you trade. The fundamentals of a market are exactly the same for every market. You got buyers, it goes up. You got sellers, it goes down. But how many buyers, how big of a range, those types of things, it's different for each asset. Henry says, does the 45-degree angle apply to the overnight profile? Yes, it does. So the 45-degree angle is essentially a way to see, looking at time, when you have very strong resistance. Let me see if I can find an example. This one counts as a 45-degree angle from the low tonight. It's not great, but it's there. Let me see if I can find a better example. Yeah, here's one here. So let's expand out this profile. So you had this 45-degree angle from the high to the low. So we're looking at the letters. We're looking at the TPOs. Okay. It also happened with the volume, but that's not what it's about. It's about the TPOs, the letters. Okay. We got that 45-degree angle. What does that mean for us as traders? It just means you got some strong resistance in there. Doesn't mean you can't get through. We did it this day, but we had to poke and poke and poke and poke and poke to be able to get through. So when you see that, really big, strong 45-degree angle like that, it doesn't mean the resistance is guaranteedly going to hold or support if it's the low. It just means that it's going to take a lot more force to poke through. So if on that day you're going long and you see that 45-degree angle, what are you saying to yourself? I don't want to fall in love with this trade. This should be a scalp, not a bigger trade, right? I can go long, but I just want to take profits quickly, rather than waiting for some bigger move to come. Because I know we're probably going to have to poke and reverse and poke and reverse and poke and reverse, as opposed to, where if you don't have a 45-degree angle like here, the market can just glide right through it. No problem. So if you were long in here, you want to just stay long. So that's how we think about it. Okay, so what did we say in the D period? We said because we left behind these single prints, it increased the odds the momentum would continue in the E. Okay? And that is true. The odds now favor that the E period is going to make another new low. Let's say that doesn't happen. Let's say, I don't know where right now the market reverses and comes back up for those single prints. Well, then that's the market's way of telling us the move down is over. Right? Getting cessation of the trend now means it's over. We made our low and we're going sideways the rest of the day. But if we do make that new low, it means we've still left behind those single prints, which is bearish. Still targeting 67.39. And again, I'm talking ES, not NQ here. DNK says, on the NQ, would you look to short resistance? Yes. So it's a tricky short, you know. Well, not now. Actually, now it's easy. Now that we printed the E period, it's an easy short because you could get short at the E period high. You know, you get short up here using cessation as a stop, and that gives you good risk reward. If you know you have a weak low, you know, if you know you're heading down to repair 24,944, why do you think that? Because it's a magnet and we have momentum, right? So if that's your target and your stop is cessation of the trend, well, then it's a good risk reward. But in the D period, it was tricky to short because it was hard to know where. You know, you might have needed to wait for the market to come all the way back up here to get short. But now, yes, this is shortable. But like I said, unlike ES, which I think could go lower all day, I think the NQ is not as bearish. I think it's just fishing for a low. It just hasn't found it yet. Derek, you may need to rephrase this question. He says, can you show how the change in ticks per row on window? Oh, I see what you're saying. The tick increment. Yeah, I don't really want to mess with my chart because it might freeze up, you know. My poor processor is processing a lot of data right now. It may be on the website. No, I didn't put it on there. Okay, I'll go add that on there. But essentially what the difference is, there it is. It's here. Okay. Let me see if I can zoom way in on this and show it to you guys. Okay. So this right here is the exact same chart, just with different tick increments. So visually, it just looks very different. If you look at it in one tick increments, it's very elongated. It's very stretched out. The fatter areas are very thin, right? But then when you switch to 2 tick, it starts to get more compressed. And when you switch to 4 tick, it gets even more compressed. Now the fat areas are very clear and easy to see. So when the market is less volatile, when the ranges are smaller, you want to be in a smaller tick increment. When the ranges are larger, you want to be in a larger tick increment. So again, it's kind of hard to know ahead of time what's going to happen. But the way I think about it is if I'm trading, you know, here today, and the market just keeps pushing in a certain direction, like it's pushing lower and lower and lower and lower. And I'm afraid to go short because I'm looking at the profile and it looks like it's gone too far. It looks like it's getting too thin. It looks like it needs to reverse, but then it doesn't. It just keeps going. That's when my brain will say, you know what, Charles, you should probably switch to 4 tick. And then I'll switch and it'll compress that all down to a much smaller range. And then I'm like, oh no, this thing has room to go. It's just kind of a pattern recognition thing with your brain because the market doesn't have the same size ranges all the time. Sometimes it is large ranges, sometimes it is small. And it tends to have patterns with it too. Like if we just look at the daily chart, you know, we can see there are times where the market has very tight ranges, very small days, and times where the market has very large ranges, very extreme days. You know, and they tend to kind of correlate with each other. We tend to have more bigger days kind of back to back and more smaller days kind of back to back. And you can have like a small day into a big day, into a small day. You can have anything. The markets are random. Anything can happen. But you just tend to kind of notice the market gets in these zones. So probably on these days in here, I would have preferred to have been in 4 tick increments. In these days in here, these days in here, I would have rather been in 2 tick increments. These days in here, I'd probably rather be in 4 tick. These days in here, I'd probably rather be in 2 tick, and so on and so forth. And so it's just an experience thing. You just start to notice, man, this range is way bigger than we've had the last few days. We had these tight ranges, and now all of a sudden we're having these really big ranges. And so you go, oh, I need to adjust my tick increment. I've tried to come up with a more exact way to do it, like based on the VIX or something like that. And it's just, the only thing that works is intuition. You know, just let my human brain do pattern recognition that I don't even understand why, but I just go with the flow. I just go with the feeling, you know? Rod says, if it goes down to 67.44, I will short again to 67.30. So I'm not going to try to tell you how to trade because, as I've discussed already, everybody has to trade their own way. But that's not the way I like to think about trading, right? If I'm trying to get short, I don't want to sell lows. I want to sell resistance, right? So you are right that if the market comes down to 44, it's very likely to head down to 39. Or 36, right? Like the probability of getting that next move is good, but it's not a good entry for a trade because where's your stop, right? You say, oh, well, I'll just use a tight stop. Well, then you're probably going to get stopped out, even if it's going to keep going down. So the only place you can really put your stop, if you're shorting at 44, at least right now, would be all the way up here above the D period high. So that's not a good entry. What would be a good entry is getting short as close as you can to the D period high. Now, the odds of the trade working are not as good there, but the risk reward is way better. And what you will tend to find is that you don't need to have a high win rate. You don't need to be right very often if your reward is always much bigger than your loss. You know what I'm saying? So let's say you're like me, and no matter where you enter the trade, it's always 2% of your account. Well, if you enter the trade like that, you know, where you want to, or sorry, you said 44. You know, if you wanted to enter the trade like that, and let's just say, you know, you put your stop all the way up there, well, then you're risking 2% of your account to probably make less than 1%. And so if you're going to do that, you have to be right way more than you're wrong, right? Like you have to be right like 80% of the time to be a profitable trader. Whereas if you get short up here, where the reward is much better than the risk, you're risking 2% of your account to make like a 12% return. If that's what you're doing, if you lose 2% when you're wrong and you make 12% when you're right, you only have to be right every now and again. You can be wrong most of the time and still be profitable and still make more money than you lose. So would I go short at 44 if for whatever reason I was absolutely convinced it was going to go lower there? Yeah, I mean, it's possible, but I'd much rather get short up here. I'd much rather get short in the resistance as it's going up. That's just the way I approach trading. It also depends whether you're a day trader or a scalper. That's another big thing. Are you just trying to grab a quick bite, or do you want to be in the trade for whatever the move is going to be? Which in this case would be down to repair the weak reference. Oh boy says there is a high volume node at 76, 75-ish. Looks like the market is trading around it. 67, 45-ish. Yes. So the fairest price to do business from yesterday, in terms of time, was right here. And we also have this little volume node, which is also what was the previous high. So yesterday, as the market got up to this level, that's where things changed. That's where the momentum to the upside, really took off. And that's the fairest price to do business. So that means that's an area where both buyers and sellers are comfortable doing business. And so, yes, right now it is kind of acting as support. And somebody in the chat called for 44 for the bounce. They did well today. I just don't think it's going to last. I think because we're still one time framing, and because we still have a weak reference as a target, and because we didn't fill the single prints, I don't think this is the low. But it is a place where buyers are trying to defend. They are trying to reverse up and out of here. I just don't think it's going to work for them. Why? Because those buyers are fighting momentum. So if you look at it, the first time the market came down here, they bought. They saw the support level and they started going long, right? And they got to move. And then they started to get squeezed because they were then the sellers got squeezed, but then the market started to come back down. So those buyers are getting nervous, right? They're getting real nervous. Those buyers that were going long down here in the D period, but they're okay. The market turns around and starts heading back up again. But then what happens in the E? What happens when we come down here and we test that D period low? Remember, the buyers there are trying to fight momentum. They're trying to guess the low of the day before the market generated information tells them it's the low of the day. Who does that? Weak hands, right? Not skilled traders. That's not how skilled traders trade. They wait for confirmation. They wait for the market generated information to tell them the momentum is over. They don't just gamble. So look at how easily they got squeezed. 500 stops got taken out by just poking back through that D period low. But they're trying again. They're trying to bounce this thing up and out of here. But if it don't work and we print that F period in 15 minutes, that E period low looks real juicy to the market because there's stops. Just like that. There's another 500 down there they can take out. It will never cease to amaze me how much traders want to fight momentum. It's like it's just something about the human brain. You just always want to think if the market's been moving and moving and moving, it has to reverse. It can't keep going. And it's so silly because that's what makes it keep going. The market could easily reverse and come back up right now. Why won't it? Because of this shit. Because people keep trying to fight momentum. And so the market knows one more poke and we can squeeze them. So it does. And then they try to fight it again. And the market knows one more poke and we can squeeze them. And so it does. And they try to fight it again. And so you just get these days where the market just keeps going and going and going for hours. Because over and over again, that they keep trying to fight it. And they keep getting squeezed. Why? I don't know. But it never happens to me because I only trade with the trend. That one simple rule means I'm never one of those guys who fights that momentum. Tom says, Charles, are you going to monetize your I have a feeling indicator? That's the brigade stream. That's my I have a feeling indicator. I got a feeling, woo-hoo, that the pirates know what's going to happen. Gunjuna says, does Jim Dalton also modify his tick increments? I don't think he does. Maybe he does. I don't remember. I mean, I took his course like 5 years ago, so it's hard for me to remember the specifics of what he does versus what I do. I really don't remember. Jason says, excellent play-by-play, Charles. It was a webcam-worthy stream. Yeah. Should have turned on the webcam today. Catherine is saying that Jim Dalton does modify his tick increment. Okay, there you go. So it's not just me. It's the godfather of market profile as well. Frito says, guys, the tick increments aren't that big of a deal. It's just about what's comfortable for you visually. I use one tick most of the time. If the market is really wide, I'll go to 2 or 4. Yeah. It's, a lot of traders, they get obsessed over thinking that the edge is having certain settings on their software. They think like, if I just program my software with exactly the right settings, I'll be profitable. I'll be able to tell what the market's doing. I'll be able to trade. And that really has nothing to do with it. It really doesn't matter what your charts look like. You can program them any way you want. You can look at any chart you want. You know what I mean? That's not what matters. What matters is your brain's ability to recognize things on that chart. So you can have any type. You don't even, I tell people, you don't have to trade with market profile. There's millionaires out there that just trade with candlesticks. You don't need market profile. But for me, market profile makes it the easiest to trade. It's just for me personally, that's what works best. The settings that I have, I didn't get from anyone else. I just experimented and figured out what worked and didn't for me. So don't obsess over having the right software or the right settings and that type of stuff. Just focus on your ability to recognize opportunities, whatever settings you're using. And your brain will figure it out. Your brain will begin that pattern recognition and start to recognize things. Okay, so earlier we talked about this. If I wanted to short this market because I believe that we are heading to 67.39, the best place to do it is going to be up here near the D period high, because that's the place where we have the minimum amount of risk. Okay. Now you might say, I'm not confident. You might say, I think the market just made its low and it's about to reverse here. I don't want to get short here. And that's fine. That's totally fine. But if you've been watching the market go lower, you've been watching that trend push lower and lower, and you've been unable to get in a short, and you want to participate, right now it's still trending lower. Right now the momentum is still down. You should still want to be getting short. And why not do it where you can take on the minimum amount of risk? And so you say to me, well, Charles, what if I go short right now and I put my stop at cessation and then I get stopped out? Well, then I'm losing money. And I say to you, who cares? Because if we get cessation right now, then we know what comes next, which is sideways, chop the rest of the day. We've got our high, we've got our low. And so then we can take reversion to the mean trades back to the POC all day long, and you'll make back the loss from that one little trade. So isn't it worth it to get in where you have that little bit of risk and not feel FOMO at the low, and to get in at a good location where you literally get in and 5 minutes later, you're in the profits? Isn't that a better way to trade? And all you have to accept is you may get stopped out, which shouldn't bother you because it sets you up for the next trade. This is why I don't sell the lows. I sell the rips. And this is that moment right now at the D period high. What we want to see? We want to see price reverse somewhere below 56. Okay? And we want to see those ticks go back down below the zero line. If you wanted to get short right now, you only have to risk 1.5 points to get short. Whether or not the trade works, I have no idea. But I know if I get stopped out, I won't care because it sets me up for the next thing. So there you go. There's your best entry on a short that exists right now. And if you get stopped out, you know what's going to happen the rest of the day. So you can risk 0.5 point right now to get into this trade. And you're stopped out. Okay. There it is. All right. So this is actually good news, right? Why is this good news? Because now we have a clear understanding of what the market is doing. What were our 3 scenarios for today? At the market open. Scenario 1, we break out and we continue the momentum higher. Scenario 2, we sell off and head back down to the opposite end of the range. Scenario number 3, we just spend the day grinding right on that balance area high. At this moment, right now, the market generated information has just told us which of those 3 we're doing. We're grinding on the balance area high. The balance area high, 67.54. So what do we expect the market to do the rest of the day today? Go sideways. Chop around in here. The way I would trade that, I would be looking to get short above the value area, above the blue box. So if the market were to come up here, I'd be looking to get short to come back to the POC. Or if the market were to come back down, I'd be looking to get long down here to come back to the POC. Why do I choose the POC? Because that's what I define as the fairest price to do business. So there's no edge for longs above the fair price. They're probably overpaying. And there's no edge for shorts below the fair price. They're probably paying, they're probably getting ripped off. So the best place to be doing business as a seller is above the fair price. And the best place to be doing business as a buyer is below the fair price because you're getting it on sale if you do that. And once you get back to that fair price, anything can happen. So you don't really want to still be in the trade. You want to lock in those profits and look for the next opportunity. I feel very confident that we are going to go sideways from here. I know you're all wondering about that week all-time high. Could we get to that today? And it's certainly possible. Let's see if we still have that, positive gamma above price. Positive delta above price. We do. Yeah. So there's a chance that we could start to accelerate as we work our way higher. And that would get us to those new all-time highs. But right now, my assumption is rotation. Sideways. Any final questions for the pirate before I say goodbye and make myself some lunch? Thank you, Hustler Forever. Good to see you. Welcome back. All right, guys. Well, with that, then I will say goodbye. Like I said, if you're new to the channel, if you're watching this for the first time and you've enjoyed what you've watched, for just $20 a month, you can be a member of the Pirate Traders Brigade. So if every day I was doing this that I did for you here today, describing what the market is doing, laying out the scenarios, laying out the probabilities, if you think in an entire month you might have one trade where you make more than $20, well, then you've paid for the membership. If you think you won't have one trade where you make at least $20, you probably shouldn't be trading. So I hope to see some of you join the brigade, and members of the brigade, I'll see you tomorrow morning. Have a great day, everyone. Au revoir. Farewell.